The United States economy often presents a paradox. On one hand, various indicators suggest that it is robust and thriving. Unemployment rates are at historic lows, stock markets are reaching new heights, and consumer spending appears to be on the rise. These statistics paint a picture of a healthy economy, one that is recovering from past downturns and moving forward with confidence. However, when one looks beyond the surface, a different narrative emerges. Many individuals and families are struggling to make ends meet, and there is a growing sense of discontent among the populace. This disparity raises the question, why does the U.S. economy feel strong on paper but broken in real life? To understand this dichotomy, it is essential to examine the metrics that are typically used to gauge economic health. The gross domestic product, or GDP, is often cited as a primary indicator of economic performance. It measures the total value of all goods and services produced over a specific time frame. A rising GDP suggests that the economy is expanding. Similarly, low unemployment rates indicate that more people are finding work, which is generally seen as a positive sign. However, these metrics can be misleading. For instance, GDP growth can be driven by sectors that do not necessarily benefit the average worker, such as technology or finance, while traditional industries may be struggling. Another critical factor contributing to the perception of a strong economy is wage stagnation. While unemployment rates may be low, real wages for many workers have not kept pace with inflation. This means that even though people may be employed, their purchasing power has diminished over time. Many workers find themselves in jobs that do not pay enough to cover basic living expenses, leading to financial stress and a sense of insecurity. The disparity in wage growth is particularly pronounced among different demographics, with lower-income workers feeling the brunt of this stagnation. Inflation plays a significant role in shaping the economic landscape. Rising prices for essential goods, such as food, housing, and healthcare, can erode the benefits of wage increases. In recent years, inflation rates have surged, leading to increased costs of living that outpace wage growth. This phenomenon has left many families struggling to maintain their standard of living. While some may argue that inflation is a sign of a growing economy, for many, it simply means that their hard-earned money does not stretch as far as it once did. The wealth gap in the United States has widened significantly over the past few decades. A small percentage of the population holds a disproportionate amount of wealth, while a large segment of the population struggles to accumulate savings. This concentration of wealth can lead to a sense of disenfranchisement among those who feel left behind. The middle class, once considered the backbone of the American economy, has seen its share of wealth decline, leading to increased economic anxiety. This growing divide raises questions about the sustainability of an economy that appears strong on paper but leaves many behind in reality. Debt is another critical factor that complicates the picture of economic health. Many Americans are burdened by student loans, credit card debt, and mortgages that can feel overwhelming. While borrowing can stimulate economic growth, excessive debt can lead to financial instability for individuals and families. The rising cost of education has left many graduates with crippling debt, hindering their ability to invest in homes or save for the future. This cycle of debt can create a sense of hopelessness, further contributing to the perception that the economy is failing to serve the needs of its citizens. The rise of the gig economy has also transformed the landscape of employment in the United States. Many individuals are turning to freelance or contract work for flexibility and autonomy. However, this shift often comes at the expense of job security and benefits. Gig workers typically lack access to health insurance, retirement plans, and paid leave, leaving them vulnerable to economic fluctuations. While the gig economy may provide opportunities for some, it also highlights the precarious nature of work in the modern economy, contributing to the feeling that the system is broken for many. The psychological impact of these economic disparities cannot be overlooked. Many individuals feel a sense of hopelessness and frustration as they witness the growing divide between the wealthy and the working class. This disillusionment can lead to a lack of trust in institutions and a sense of alienation from the political process. When people feel that the economic system is rigged against them, it can result in social unrest and a demand for change. The emotional toll of financial insecurity can affect mental health, relationships, and overall well-being. Government policies play a crucial role in shaping the economic landscape. Tax policies, social safety nets, and labor laws can either mitigate or exacerbate economic disparities. For example, tax cuts that disproportionately benefit the wealthy can widen the wealth gap. while investments in education and healthcare can provide support for those struggling to make ends meet. Policymakers face the challenge of balancing the needs of various constituencies while addressing the underlying issues that contribute to economic inequality. Looking ahead, the future of the U.S. economy will depend on how these challenges are addressed. Sustainable economic growth requires not only a focus on GDP and employment rates, but also a commitment to improving the quality of life for all citizens. This includes investing in education, healthcare, and infrastructure, as well as creating policies that promote fair wages and job security. The path forward will require collaboration between government, businesses, and communities to ensure that the economy works for everyone, not just a select few. The perception of a strong U.S. economy on paper contrasts sharply with the lived experiences of many Americans. While statistics may suggest growth and prosperity, the reality for countless individuals is one of struggle and uncertainty. Addressing these disparities is essential for fostering a more inclusive and equitable economy. By recognizing the complexities of economic health and prioritizing the needs of all citizens, there is potential for a future where the economy truly reflects the well-being of its people. The journey toward a more balanced and just economic system will require concerted effort, but it is a goal worth striving for in the pursuit of a better society. If this breakdown helped make sense of why the economy looks strong on paper but feels broken in real life, hit like, subscribe, and turn on notifications, because we'll keep cutting through the data and the headlines to explain what's actually going on.